Welcome to Something More with Chris Boyd. Chris Boyd is a certified financial planner practitioner and senior vice president financial advisor at Wealth Enhancement Group, one of the nation's largest registered investment advisors. We call it Something More because we'd like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients on Cape Cod and across the country. Here's your host, J. Christopher Boyd.
Thanks for being with us for the Something More with Chris Boyd show. I was thinking it's been 17, almost 18 years that we've been doing this show, and we've seen a lot of market conditions along the way. When we started out, it was even before the problems of the financial crisis. We helped our audience kind of navigate some of the challenges going through that. But more recently, by the way, everybody, I'm joined with Jeff Perry and Russ Ball of the AMR team from Wealth Enhancement Group. Guys, I was thinking it's just about 5 years since the pandemic hit. And I thought maybe we just take a moment to do a little bit of retrospective, but also maybe to try to take a moment to derive some lessons from extreme experiences that come along in the markets. I know we have a lot of clients and listeners who are probably a little bit anxious as markets have been quite volatile in the last several weeks. And, maybe there's some opportunities to draw some lessons from other experiences as well. Let me just start by saying I'd be interested in hearing from you guys where you were. What was that song, When the World Stopped Turning?
Yeah, right.
But, essentially, I was thinking about how Kristen and I were out with friends on the weekend where we were at a show in Boston with hundreds of our closest. No, I'm kidding. Hundreds of people in this theater in Boston. 1 minute and out at restaurants and things, and within just a few days, everything started closing down. The athletics, professional teams, the basketball. I remember the basketball teams particularly, where it was like they're not having games anymore. I think there was a basketball player who I forget which one, it had COVID, was still, and then they were like, oh, isolation, and then, all this kind of thing. It was like, then the whole team got it, this kind of thing. Yeah. So they said, all right, they weren't going to play. And then New York City seemed like the hotbed of, in the United States. There was those couple of boats off the coast that had some people that they were quarantined, they weren't able to land, and then dock or whatever. And then it was this thing, we're not going to let it into our country kind of mindset. Mm-hmm. And lo and behold, I'm sure it was already here. We just didn't know it. My son lived in New York City at the time, and we said, it sounds like things are going to shut down soon. Why don't I come and get you? We don't know how long it's going to be. Why don't you hang out here on the Cape instead of being in the city with who knows what, going on, and maybe it'd be safer kind of mindset. So I remember driving down to New York on highways that were just desolate. Nobody was out. The world had stopped at this point. It was crazy. And the easiest drive I ever had going to and from New York City. But in any case, tell me what you guys remember, where you were. Who wants to go first?
Jeff,
I remember it very well because two important things were happening in my world on March 13th, 5 years to the day.
We were recording this,
yeah. We were selling our house that we had for many years in downtown Sandwich, so we had a closing that day. and I walked into Doug Cabral's office. Doug's been a guest on the
Yeah,
show
on our
before
show,
because he
right?
was handling the closing for the buyers. And that morning was the morning, as you indicated, Chris, that things started to get like serious. We were hearing more substantial news and possible shutdowns. So we were all talking like, should we be using different pens?
Yeah, yeah.
Should we, be in the same room? And it was just kind of joking
And
conversation at the moment because
an
it was.
eerie awareness, though,
That's
right?
right. It
Starting
was
to come.
something had changed that day for me. That's when I noticed it at
Yeah.
that closing. And then so we had the closing, and I was leaving the closing, calling my son because I had just heard we had tickets to the Celtics game that night. Another thing you mentioned, I had just
Hmm.
heard that our game was the first game. Or that
Yeah.
was the first game that was canceled. So I was calling him to tell him, and it's so yeah. It seems like a lot longer than 5 years ago.
It's amazing, right?
Change.
Um, yeah, I remember it was funny. We had a client in maybe January of that year who had said, "There's this crazy thing going on in China, and I'm really nervous. I want to pull everything out." And I was like, "Are you sure? That seems kind of crazy. Maybe that's extreme." I didn't say crazy, of course, but I said, "Oh, that's extreme. What are the odds? This kind of thing."
Yeah.
So she did. She pulled everything out. Of course, genius, right? On the other hand,
Did she put it back?
she never put it back in, so she missed out on a lot. Anyway, we'll come back and talk about markets in a
That's a
minute.
good subject to talk about. Yeah.
But it was at this point that you're talking about, maybe just before this, that as a team we started talking about, well, what if this really does evolve into something that there seems to be this growing concern around? How should we be navigating that? And so I think one of the things we want to talk about in a few minutes is just what might we derive from this, got some lessons. But I want to hear about Russ. Russ, you lived in New York City, didn't you?
Yeah, I was in New York City at the time, and I remember in probably about like December of the previous year, I was reading about COVID, and like it was way at the bottom of the news app. It was like, oh, by the way, there's a virus in China.
Right.
And I remember reading it and thinking, oh, that's like, I had an eerie feeling about it, and I started following it from that point, and
we hear about stuff in Spain. I remember it was you hear about it kind of moving around the world a little bit.
Exactly.
Yeah.
And I think it was around that time, probably like January or maybe February, I started buying. So I was an early adopter of masks on the subway.
Yeah, good move.
And I was, and people were looking at me like I was crazy. I was trying to convince my girlfriend to wear a mask.
Because it was only like at that time you only saw people from Asia in airports, wearing masks. I think prior to this,
very
right?
Unusual.
It was unusual, but they had bird flu, and they had been through some of these kind of things before in other parts of the world where they had grown accustomed maybe to masks and so forth.
Right. And so I was definitely an outlier in the subway.
Yeah.
My girlfriend was trying to get as far away from it as she could.
And you hadn't gotten it until just recently.
Exactly. I was extremely cautious. So in any case, I was I was following what was going on, and I was like watching pretty closely, and then you start hearing about these cases in the city, like doubling, tripling overnight. And similar to Jeff, I was out at a show at Radio City, like I think it was like a Thursday night, and pretty big crowd in the audience. Like no one really seemed to miss the show because of all this stuff that was going on. But next day they shut down Broadway, and I was like, okay, that's a pretty good sign that things are escalating here.
Serious.
So I sounded the alarm bells for my family, and I was like, let's all get in the car. Let's get out of the city. Let's start there. My dad always had this thing about, getting trapped in Manhattan. If there was ever any kind of emergency, if they shut the bridges down.
Didn't want to be stuck.
So I was like, let's go to New Jersey. Went to my grandma's house in Jersey and hunkered down with her for about a week. And as things started escalating, and you start hearing these horror stories in New York City that the hospitals were getting overrun pretty quickly.
There was these crazy stories about at the time. I was obsessed with the news, and the New York Times app, page. They had, I was on the app, but they had on their website some, details about tracking COVID in various locations by counties. I became obsessed with that stuff.
Yeah.
Because there were these horror stories about people who just would die these horrible deaths with they couldn't breathe, with the ventilators and all this. And remember how ventilators were at a premium, and there were not enough of them, and the hospitals were being overrun. And then it was like, well, should you go? Should you stay home? It was just unclear what to do. And I remember in those early days with makeshift masks. We didn't have the masks that you were an early adopter for.
Right.
So we were getting cloth masks and things like it was just something, and then going to the grocery stores, wiping down every box that came home. It was just
segregating
huge amount of
packages. And the most memorable thing that followed was my mom was in an assisted living, and I went to visit her one day and couldn't get in. Doors are locked, no visitors. And
and my mom lived in a continuing care retirement, independent living retirement community, and they too were isolated because, of course, it was the elderly who were the most susceptible to having other issues that became the most prone to being hit hardest by COVID. I remember thinking too, when you saw those, you were talking about the hospitals being overrun, and then they had these refrigerated trucks with just the huge number of deaths, and they didn't have the ability to deal with it all. It was just, and then you couldn't have a funeral. I'm sure you all knew people who died from COVID.
My mom died with COVID. She had so many other things, but we were not able to have a public funeral. We just had a family gathering, at the cemetery, and so much was changing. And along with all that, nervousness and concern in the world, the markets started to get nervous.
I remember my Aunt Rita died in that time. My wife's cousin, who was similar in age, died. So definitely, I think everybody at some point had some connection to loss related to COVID.
For sure.
Russ, you as well?
Yeah, no family, fortunately, but there were a couple people in our building that we were close to that passed away prior to the realization of what was even going on. There was some kind of crazy pneumonia that spread. I think
we had a client who died of pneumonia that I really wonder if it was COVID.
Maybe it was early.
It was
Yeah.
So in any case, so there was, and I will say one of the things that I also think about and associate with COVID was this sudden shift where everything shut down. We closed the office. We worked with people. Suddenly we're adopting virtual meetings and technology that previously we weren't inclined to do. Clients liked coming in person, but in the midst of this, it opened up the door of everyone worked remotely. Brian was commuting from Boston 3 days a week to the Cape. I'm sure he was happy that we adopted virtual stuff. He didn't have to come after that.
All of a sudden, everybody knew the word Zoom.
Yeah, that's right. And it has changed business and business travel, meaningfully. I don't think conferences are ever, back to what they were previously, but there's this notion that, and I think for a time, life slowed down, which there are times I missed that aspect. I don't miss any of the other stuff, but I did like the fact that, we worked from home, we had family nearby, we took walks, and we were out, got fresh air a little bit with, just because we were stir crazy, right?
Yeah.
Because you weren't driving anywhere, you weren't doing anything. But for, working from home. I did the show from my dining room table
Mm.
with all our equipment, Anyway, think there are some lessons to come out of that are sometimes it's good to slow down a little bit, because we're in such a rat race.
Yeah.
There are other lessons that we want to derive from that experience. So let's talk about those. Jeff, you started to go there with the financial story.
Well, I think we can agree that COVID and the chaos and the uncertainty, I guess, that followed the recognition of what was happening was a driver of a market decline in April of 2020, shortly
Well,
after the time period we're talking about.
in effect, the government said, "Hey, it's not safe.
Right.
Stay home." But if everyone's staying home, there are people who don't have paychecks coming in, and
Sure.
companies were, going to likely fail. So there was all kinds of measures, extraordinary measures, to try to help, individuals to have income and companies to be able to keep afloat and maybe keep up with some payroll and the like. Was it PPP? Was that what it was called?
Yep, there were loans. There were, loans people had to pay back, loans for employees. There was all types of government intervention, but
Yeah.
the markets, the financial markets, were worried about the revenue of corporations and how's this all going to play out.
Things dropped starkly in the face of, hey, the world has stopped.
The world has stopped, and
will that mean profitability stops? And therefore, is there going to be any revenue? Well, I think in times like those, it's hard to keep your perspective on things. The idea that Brian would talk about the idea that earnings aren't a single year, when it comes to stock valuation, it's not based on a single moment in time. It's based on projected over many years.
Yeah.
How does this play out? But of course, you have the uncertainty of, well, what's changing? What does that mean? How will it play out?
I think that's the key word there, Chris, is uncertainty. Corporations and markets adjust to things, and maybe we're going to talk about this. I'll just tease it now.
Go for it. Let's do it.
It's kind of uncertain in the market right now, right? I mean, we have the uncertainty isn't a pandemic. The uncertainty is economic and political, and to it specifically tariffs, right? The market isn't sure what's happening with tariffs, and it makes the market unstable and uncertain, and that usually means a downward trend, in my opinion, when the market and corporations are uncertain about how they're going to be able to do business or what the rules of doing business are, taxes in this case, tariffs. We tend to see a downward trend, especially, the market had been good and is good now, or was good. So there's some analogy between then and now, even though it's a different subject.
Yeah. When we came out of 2019, we were dealing with great, wind at our back, a solid year in the markets, and then suddenly you have this disruption.
Right.
I think what you have to take away from that experience, and perhaps the analogy in the midst of what's going on now, is good investors are the ones that take advantage of opportunity. The impulse that people have oftentimes is to say, I'm going to get more defensive as a consequence of anxiety.
Mm-hmm.
And the best investors say, what opportunities is this creating for me to take advantage of as a long-term investor?
Yep.
And I think that's the mindset we need to be interpreting as investors. When things are feeling perhaps a bit excessive, we get a little more defensive, which is what our firm had done on the edges in 2019. So as it turned out, not anticipating the pandemic, but just feeling like things were a little bit overpriced, we were better positioned to be not feel it as fully as some people might have.
Mm-hmm.
Similarly, I think when we look at going into this year, our team strategies for our clientele, the discretionary strategies we manage for our clientele. We've been recognizing that for those most conservative investors, well, there's a little bit of excess in the price of the market, the multiples that people were paying for certain parts of the market. So there was an opportunity to be a little bit more defensive, which we were. That's been good in the sense of what's going on around us. Mm-hmm. And what we need to think about, whether we're a moderate or aggressive investor or a conservative or preservation-minded investor, is in the midst of these changes, as markets become a little bit more volatile, valuations readjust, does that create opportunities? And I think that's one of the things I will say, to give Brian Regan some credit for our team. In the 2020 environment, he had great insights in the way he was thinking about things, which I was very appreciative at that time. That it kept us in perspective of opportunities that were being created, whether it was in treasuries or in municipals or even high yield exposure. There was opportunity with less risk than maybe stock-like returns, but maybe not stock-like risk. Similarly, when it came to our stock exposure, there were certain sectors we wanted to reimagine how we wanted to be positioned in, given where there was greater disruption, there's greater opportunity. So these are things we need to kind of take to heart in challenging times, when the inclination, the temptation is to say, arms in the air, run for the hills. Like we want to be inclined to increase our cash. Let's do something. That notion. Don't just sit there, do something.
Right.
We want to take the opposite and say, don't just do something, sit there. We've already, with our clients' strategies, had the opportunity to be a little bit proactive on some of these considerations. And that doesn't mean there isn't disruption. When markets move, everybody feels it. If you have stock, you feel it. But to what extent? And does that create some room for opportunities to be benefited for as we look longer term ahead? I don't know what to add.
This conversation reminds me of something that we talk about from time to time. It's probably 10 years old now, but the Vanguard study,
it's even longer than that.
Yeah, it could be. Who did an assessment of the value of working with a financial advisor who has your best interest at heart, and who's doing these things every day, is aware of history, aware of patterns, aware of the ups and downs, and is going to be less impacted by some of the emotional things that happen, because we know that a majority of investors, this isn't just our opinion, this has been studied, the majority investors, when the stock market's roaring to record highs, say, get me some of that, I want in. Yes. And when the market is down with a correction or even in a bear market, people say, get me out of this, I don't want to lose more money.
Yeah.
And what this Vanguard study showed is that when you work with an advisor who has the tolerance, who has the experience, who has the wisdom that you've been describing, Chris, back in 2020 or today even, that behavioral coaching that we can do with our clients, that a good advisor does with their clients, and maybe educates them, but also guides them to not make the wrong emotional choice, can save them, some basis points, quite a few. I think, I don't want to be wrong, but I think that part alone was either 2 or 3 in the Vanguard study.
Yeah, so
2 or 3 percentage points on their average annual return.
So the Vanguard study said a good financial advisor could, this advisor alpha, with a measure of how much benefit one gets from good financial advice, in aggregate was about 3%. The behavioral coaching was about 1.5%.
Yeah.
The half of that potential benefit. Other things like paying attention to the right asset allocation, paying attention to cost of the investments you use, rebalancing from time to time, identifying where you take money from, the decisions around
Sequence-
where asset
sequencing,
location,
yeah.
um, the variety of other considerations that all of which can add incremental value. And in addition to that, there's all these financial planning considerations. When do I turn on my Social Security?
Right.
This is not in that study. When do should I do a Roth conversion? How am I going to manage my estate plan or my long-term care concerns? Just having some help in navigating some of these various challenges to one's financial plans and one's wealth. There's great opportunity in that.
Chris, am I correct that the behavioral coaching, which is I think what I'm talking about, was the single largest component
It
of the
absolutely was.
Investor Alpha? Yeah.
Yeah. And, I think along these lines too, we've mentioned this before, but Dalbar has done a study routinely. And it's worth reminding investors that behavior tends to be what undermines some of our performance oftentimes.
Right.
Dalbar does this study and it says, well, how much does an investment typically say its rate of return is in a given period of time? And compares that to what does the typical investor actually achieve as their rate of return being invested in that fund. And there's a huge disparity oftentimes. And the reason is because investors tend to get interested in a fund after it's had big returns or notable performance that cause it to be more show up on screens or whatever they search. That they go, oh, this looks really good. I'm going to get some of that. Then it has a period where it's out of favor for whatever reason, and then investors get frustrated, leave, go chase the next shiny object. Meanwhile, then this fund rebounds and has another banner year or whatever. This experience that they're not fully participating in, they've missed out to have drastically different kinds of results. There's various ways we can see this take shape, and it's one of those things that as investors, we have to be very intentional and deliberate about what are we trying to accomplish.
Right.
What's our rate of return? What's that fit into the long term? That's not to say it's going to happen every year. It's not going to happen every decade. So we want an allocation that will be suited to our temperament and our tolerance. We talk about buckets, but we want places to have different levels of risk in our experience so that when there are more dicey times, we will have places to go for where we can draw from. When there are fabulous times, we want to participate to some extent. So we need to have something that's tailored to the client's needs in the context of their financial plan, but also their mindset, their temperament, their willingness to endure discomfort along the way. And sometimes when you are in the midst of that discomfort, I think, Russ, you had a conversation recently with a client when I was unavailable where they were saying, I'm nervous, how's this going to play out? And you looked at it in the context of the financial plan and did a stress test.
Right, we did some stress testing on the plan, and I was just taking a look. What would happen if the market dropped 30% tomorrow? Would the plan still be okay? Would your future be okay? And it was. It was 99% probability of success, even with that. So
sometimes these kinds of things, to have that context as a place that you can look to at the financial plan, not just the seemingly hollow, hang in there, it'll all be okay. Sometimes you can have some basis for that, say, oh, even if this happens, you're still gonna be okay. It's not to say that it's a forever moment in time either. Yep. So I guess my takeaway for you is to recognize that extremes happen, and the best investors don't overreact. That doesn't mean you can't make some changes or envision how your portfolio should be positioned. It's better to do it proactively, but sometimes you can do things even in the midst of declines or anticipating maybe there may be greater volatility in the future. How should you be positioned? If you need help in thinking about that, talk to a professional. Look at it in the context of your financial plan. How does this all fit together? And do some stress testing. Maybe you can see that even despite market volatility, you have a plan that will work without problem, hopefully. And if not, maybe that comes back to not just the portfolio design, but other considerations within your financial plan, and to think about until the time is right to think about your portfolio design. In any case, these are things to talk about with your financial advisor. Hopefully you are hearing communication from your firm. If it's not our firm, we are, just to share, we've been in the midst of market movements. We've sent out communications, emails to clients. In addition to a recent newsletter, we started sending out some communication a week or so ago saying, hey, here's some things that's going on. Here's how we're positioned, things to know. Now we're doing a little webinar this week. I'll call it a webinar. It's really just a Q&A, an opportunity for people to have ask some questions, get some insights. And then obviously we do the communication through our podcast as well. But if you're not getting that from your firm, maybe we can be a resource to you if you need it. So don't hesitate to reach out. So all that said, what else did we not cover? What do you think? Anything you wanted to talk about when we got into this COVID talk?
Well, I guess just looking at it big picture, I think the last couple of years we've seen such great gains in the market, and it's easy to forget that there are sometimes that the market has to pull back. It can't go up 24, 25% forever.
That's right.
And
these are inevitable.
What we're seeing right now is the uncertainty we're seeing is nothing compared to when COVID hit and the market just totally tanked because no one knew, is this going to be like end of times kind of scenario, or is this a temporary blip? And markets recovered, and markets have always consistently over history recovered from declines. And the uncertainty we're seeing right now that Jeff mentioned, I feel like it is uncertainty. It's not COVID level uncertainty.
Right. It's a concern. It's a frustration, but it's a moment in time. And if it turns out that markets and economies are, if there's worry of a recession or something, things inevitably we go through economic ups and downs, but and then people adapt, they make adjustments, they make changes. So if things go sideways, there'll be revisions, there'll be changes, there'll be things. But in the meantime, there's opportunities. As investors, we want to be thinking about how do we position the portfolio in a way to withstand volatility. When we think about if we're worried about a recession, if we're worried about inflation, stagflation, whatever the scenarios we might envision, there are ways to be positioning to try to navigate that. And sometimes it does take some active movement within the strategy of the portfolio. But these things are not static, right? There are things we want to change. That's not to say we're trying to jump in or jump out, but trying to recognize changing dynamics and how are we best positioned within the context of that. These are the things that portfolio managers strive to do and pay attention to. Did I take over your talk?
No, you got it.
Jeff, anything you wanted to hit on before we wrap up?
No, just a reminder, and offshoot to what Russ was saying, corrections in bull markets, for example, are very healthy and normal. We had used the word frothy a few times in recent episodes previous to President Trump announcing the variety of tariffs and questioning whether or not the market valuations were getting a bit extended. And even without the tariffs, it's totally reasonable that we would see a 10% drawdown. We hadn't seen one last year, and it's unusual to go a year and a half without some type of correction. So lots of noise, but this just could also be the normal process of a market correcting its valuations and getting more in line with where it should be.
Yeah, totally agree.
Yep.
So hopefully we've added some insights for you to give thought to. Let us know if we can be a resource to you. Thanks for being with us for this edition. Until next time, everybody, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's for financial planning or portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at somethingmorewithchrisboyd.com or call us toll free at 866-771-8901 or send us your questions to amr-info@wealthenhancement.com. You're listening to Something More with Chris Boyd Financial Talk Show. Wealth Enhancement Advisory Services and J. Christopher Boyd provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is general financial comments and cannot be relied upon as pertaining to your specific situation. Wealth Enhancement Group cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.